Hello, this is Masoud Vatandoust, broker with the Vatandoust Search team, and welcome to our monthly e-newsletter. This month, certainly things have changed, and as much as I will go over the normal graphs that we talk about and the numbers, but there are some other graphs that we found which would reflect what the market is doing more these days. Before we go into that, I hope that you're all well and coping with the new situation, and everybody's healthy and keeping distances from other people and coping with everything. So let's look at the numbers. Durham Region and Toronto Real Estate Board released the numbers for the month of March, and obviously things changed mid-March, around about 14th, 15th of March, when the schools broke up for the March break, and the announcements came that the schools are not going to be open and people should practice social distancing and so on. That's when the market changed completely. We have been trying to adapt to the market and our clients' needs, and I will go over that a bit more later on. This video is going to be a little bit longer than before, but try and keep it brief for you and give you all the information that you need. So first of all, if we look at the number of homes sold in Durham Region, we don't see much difference from what we were expecting, slightly perhaps lower. 1,101 homes sold in the month of March compared to 839 the previous year, and that was an increase of 31%, which was quite substantial. But as we go through, you'll see that most of that happened in the first 2 weeks of March, as opposed to the total March figures that we normally would have had. So I suspect that the numbers would have been much higher than that if it wasn't for COVID-19 situation. If we look at the prices slightly, very slightly dipped compared to previous months, but still 8.5% higher than they were last year. So this year's average price of home in Durham Region was $656,211 versus last year's average price for March, which was $604,796. So as I say, it was 8.5% increase year over year, however, slightly lower than February average price. So these are the typical numbers that we look at. We also look at the graph of supply and demand, a ratio of sold homes to new listings coming on the market. And we can see that dropped because new listings came on the market, but not many sold. So that ratio dropped from about 70% to 60% in the month of March. As people were getting ready to take benefit of the spring market and listed homes, but not many sold. So let's go to some new graphs that I've been looking for and I've come up with. And this first one was produced by the company that does our booking our showings. And also when the offer is registered, they take care of that as well and keep stats of that. This company is an independent third-party company and really provides their services to most of the major real estate companies. So their stats, the sample that they have is huge. As I say, most of the larger, more prominent real estate companies use this company for booking their showings and also booking offers as they are registered. So you'll see from the middle box on the top row, which is highlighted, showing stats week over week. Now this came out on March 24th, so 1 week into COVID-19 situation, and week over week the showings dropped by 58.6%. So that's quite dramatic drop for the GTA. We are just looking at the top line, which is GTA. The bottom line is Central Core Toronto area. But if we look at GTA, 58.6% drop in the number of showings for week over week, and the number of offers registered in that third week of March dropped by 49.6%, so almost half of what it was the week before. Now, the next graph is actually a little bit more dramatic because it's the last 2 weeks of March versus the first 2 weeks of March. So we had 2 weeks of normal activity and then 2 weeks of abnormal activity. So again, if we look at the top row, we'll see they changed the graph slightly because this was obviously something new. So the first week they separated core GTA versus the whole of GTA, and then second week, this week, the stats changed or provided different information, which is much more useful. So the top line shows that the showings between the first half versus second half of March dropped by 66.1%, and the final week of February versus final week of March dropped by 77.2%. It should have actually gone up because March is much busier month than February, but it actually dropped by 77.2%, which is huge. And then if you look at the bottom line, you'll see offers registered for first half versus second half of March. That dropped by 60.7%. And the offer registered first week of February versus first week of March, 75.1. Again, normally I would have expected that number to be higher, but it actually dropped by 75.1%. What does that mean? Basically, we are now telling clients that this is not the time to list a home unless you absolutely have to list a home. We are still listing home. Real estate is classed as an essential business, but we are treating it essential for people who absolutely must sell. Say if you have bought a home and your home is going to be ready, you're under obligation to buy the other home, but you need to sell your home, obviously we are there to help you. But if you're thinking, I want to move, you haven't bought anything, there are not any unusual circumstances, then we would strongly advise that you stay put until the situation changes. So what's going to happen long term? I've had both myself and also Bev, Doug, all of us have had numerous calls from clients who were thinking of selling this spring and have been asking what's happening to the market. Frankly, the same as everybody else, be it healthcare, government, none of us have got a crystal ball. This is the first time anything like this has happened, so we really don't know. Obviously, coronavirus is going to eventually be resolved, but the economic impact of this, nobody knows what's going to happen. So whether the prices are going to go up or down, we don't know. However, the next graph, I'll point out a few things, and this shows if we look at the middle graph, which is the blue line or lighter blue line, that's Greater Toronto Region. And it shows the dip in 2008 where we had the financial crisis and the prices dipped there. And then it started going up until 2017 where you see the little blip there. That was first quarter of 2017 when the prices went crazy. But then it came down and it's almost a steady increase. So between January 2008 and February 2020, which is about 12 years, the price is more than doubled. So other than those two blips in 2008 and 2017, it's fairly straight line and prices almost doubled in that period, or more than doubled in that period. I'm sure even if there is a dip or a blip, doesn't matter. Things are going to go steady after that and even out. So if you have any question, as I say, we are here to help. We advise not to list homes at the moment or not to look for homes unless you absolutely must do that. And we have come up with numerous ways of showing homes without people going in and out. We are doing video photography, 3D, all sorts of tools that are available, and we have started using those in the cases that we have had to list homes. So feel free to give myself, Helen, Doug, Bev, any of us a call if you have any question or you want specific questions answered. Please feel free to call us. Sorry about the length of this video, and I hope you got something out of it, and look forward to talking to you again next month. Take care and keep your distance. Bye-bye.